Hello, everyone. I'm Chris Kapches, CEO of Chestnut Park Real Estate, and this is my first market report for 2026. I'm going to start. I'm going to start the report by using actually a French expression that has made its way into our English vocabulary, and that is "plus ça change, plus c'est la même chose." And in this case, what's changing is the year. We went from 2025 to 2026. But what hasn't changed is market conditions. In fact, January's market conditions probably the worst that we've seen for a January month in almost 3 decades. And I'll get into some of the details. And not only has it produced sort of bad results, but it's produced them in almost every conceivable area. We have issues with the number of sales that took place in January, inventory levels in January, the average sale price that came in January, and I'll spend a couple of moments talking about that, as well as the length of time that properties are on the market. If we look at sales, sales came in at just over 3,000 sales. And you'll see from the chart on the screen detailed information about what I'm going to be talking about. But as I said, sales came in at a little over 3,000 sales. Last year, which was an annus horribilis, sales were 3,820. So we were off almost 20% compared to what we did January last year. We have to go back, as I said, almost 3 decades to see a January in which sales were as low as we saw this January. If we look at listings coming in were not as high as perhaps people may have anticipated, and I'll get to why I believe that to be the case in a moment. But as we enter the beginning of February, we're dealing with almost 18,000 new listings, 17,975 to be exact, which is about 8% more than we had last year. So we've got sales that are down, we've got listings that are up. It's a bad combination in terms of a strong market. And then days on market. Days on market came in at 45. I did a little research before this presentation. You have to go back quite some time to see a month, particularly the month of January, where you had 40 plus days on market. In particular, I found that January of 2009 had the number of days on market equivalent to what we experienced in January of 2026. And lastly, I'm leaving it because I think it requires a little bit more detailed explanation, is the average sale price. Regretfully, for the first time in almost 5 years, the average sale price came in at below $1 million. As you probably know from previous reports, we hit a market peak as far as the average sale price was concerned in the first quarter of 2022, almost the 1,300,000+. It's a big number. And here we are in January of 2026, dropping below the $1 million mark. Some of my presentations going back to the latter part of 2019, we were starting to edge up towards the $1 million mark. We hit it during COVID, and of course that it skyrocketed during the first 2 years of the COVID pandemic, has gradually retracted, and here we are at 973,000, 289,000. Now, as I said a moment ago, this requires a little dissecting because the bulk of the units that were reported sold were condominium apartments. And condominium apartments in January in the 416 City of Toronto area came in at $631,000 as the average sale price, and almost $100,000 less at $551,000 in the 905 region. And since they represent such a large component of the marketplace, they're responsible primarily for dragging that number down below $1 million. Because if we look at, for example, in the City of Toronto, detached properties came in at over $1.5 million, and semi-detached properties at close to $1.2 million. So you have to distinguish between the product type in order to fully understand what that average sale price dropping below $1 million means. For anyone still looking at ground level properties, they are still fairly pricey, and I believe they're going to stay pricey because in a moment I'll talk about the demand side of things, because I don't think it has diminished, notwithstanding these very low numbers. So at the end of the day, we have to ask, like, why is this the case? What is precipitating this very slow market in January? I think there are two factors that speak to that. First one is uncertainty, and I think everyone is probably aware of why we have this uncertainty. We have some job issues. In January, we lost 25,000 jobs, notwithstanding that the percentage of unemployment dropped. That's for population, number of people seeking employment, factors that don't specifically speak to the fact that we did lose jobs. That creates uncertainty. We have, of course, the geopolitical issues, which have been ongoing for over a year now. In fact, they started a year ago this exact month, primarily as a result of the chaotic stuff that's coming out of the United States. You need certainty if you're going to be spending over $1 million to purchase a property, and that certainty just isn't in the market. And then we have, of course, the affordability issue. It hasn't gone away, notwithstanding that the average sale price has come down, and notwithstanding that even mortgage rates have come down a little bit. Affordability is still a driving force in the marketplace. And that's why if we look at markets throughout the country, you'll see that in the most expensive marketplaces, particularly the Greater Toronto marketplace, and if we look west towards the Greater Vancouver marketplace, those markets had a terrible January, primarily because they're very expensive. Vancouver even more expensive than Toronto, and its market results were even slower than Toronto's market's results. However, having said that, as the month was coming to an end, and as we were moving into February, we're actually starting to see some acceptance of these conditions, and that acceptance is being reflected in what's happening in the market. Early February data is indicating that, in fact, we're starting now to do better in February than we did in the early part of January, which is a good sign. And we're actually starting to see some strengthening in the average sale price, I think primarily driven by ground level properties, townhouses, semi-detached and detached properties, not so much in the condominium sphere. And I think we're seeing demand increasing, in that we're seeing more showings taking place, and those showings are resulting in offer presentations. And in desirable neighborhoods, particularly in those neighborhoods close to the central core, either on the west side of the city or on the east side of the city, we're seeing multiple offers. And in addition to multiple offers, we're seeing average sale prices that are being generated that exceed the list prices of the properties that are being sold. So not a pretty month, and there's no two ways of describing other than that. However, I think it is the first month in which there's some recalibration taking place, some correction taking place, and leading us to a better, clearly not a superlative, but a better market than what we have experienced over the last little while. And I look forward to providing you with data related to that improving market as we move into February and then into other months through 2026. So until then, please stay well. Thank you.